Hello my dear traders, Panda is here and today we continue to trade with my trading robot. And let's find our first deal of today. And in this video we're gonna discuss the topic of price action. And first deal is gonna be on the currency pair Australian to United States dollar, 5 minutes expiration time, and my trading bot has indicated 73% the priority of movement for sale. Alright guys, let's get back to price action. And this term may sound complicated to beginners, but it's a modern method of analyzing candlestick charts and trading without indicators. Many beginners rely too much on indicators and quickly switch between them, which often leads to losses. Eventually, they abandon all indicators and realize it's possible to trade without them. Not all traders discover price action so dramatically. Sometimes they naturally expand their skills in analyzing candlesticks and notice that others have already developed similar methods. Price action is a modern approach to technical analysis, offering more possibilities, while traditional traders rely on indicators and chart patterns. Price action traders focus on patterns based on individual candlesticks or bars. Also, price action is all about patterns. This can be single candlesticks like the pin bar, or combination of them like bearish engulfing or inside bear, used in specific market conditions. Although price action traders may use indicators, they are not the core of their approach. Moving averages and oscillators, for example, are sometimes used as extra tools. And now let's talk about history of price action. The idea of price action goes back to the basics of technical analysis and Dow theory. Charles Dow was among the first to make predictions based on market trends, including the idea that price reflects everything. And this means that the charts contain all the information needed for trading. When studying candlesticks, many start with the books of Steve Nissen, who introduced Japanese candlestick, which I've been told you in the last video, to American traders in the 1990s. Until then, American traders mainly used line and bar chart. And Nissen brought the concept of trading using only candlestick patterns, although his focus was on stock markets which differ from Forex. Another influential figure is Martin Brink, taught trend trading based solely on price movements and levels. And his work focused on wave-like price movements and updating levels, an idea expanded in Elliott wave theory by Pratchett and Frost. Price action also includes support and resistance levels, pivot points and trend lines, tools for analyzing price trends. The modern form of price action trading is often credited to Tony Crable, who described patterns like NR7 and IDNR4 in his 1990s book. As more traders moved into Forex, they needed a way to analyze markets without relying on indicators, which led to the growth of price action techniques. James 16, a notable price action advocate, shared these methods on the Forex Factory forum, inspiring many others to develop and teach price action concepts, including figures like Alex Negrete, AI Books, Sully Dudella, Dan Chesler, and Lance Beggs. Alright guys, now let's talk how can you use price action. Price action traders often use Dow theory and technical analyze basics. They analyze patterns, support and resistance levels and channels. Unlike traditional methods, they avoid indicators and focus on reading price movements directly from the chart. Price action with volume. If you trade stocks, futures, or indices, assets with actual volume data, it makes sense to use volume indicators alongside price action. And we have closed our first deal of today with profit, guys. Thank you very much to my trading robot. And now let's find our second deal of today. But before, I want to remind you guys to join my free Telegram channel where I give profitable signals every day. And our second deal is gonna be on the currency pair euro to Swiss franc. And the same expiration time here is gonna be 5 minutes. Let's run analyze, and the probability of leaving for sale is 92%. Alright guys, now let's get back to price action and now with indicators. And as we know, every trader usually has a favorite indicator that complements their trading strategy. Don't forget that a moving average is also an indicator. Moving averages are most often used alongside price action, and rightly so. There are whole schools focused on studying candlestick patterns and how they interact with moving averages. The simple moving average with a value of 20 is commonly used in price action. And now we are gonna look at a few of the most popular patterns to give you a general idea of price action methods. If you see bar in their names, you can change it to candle, because bars and Japanese candlesticks are very similar, just a little different in how they look. And since Americans prefer bars, they often use them in patterns too. Don't let this confuse you. Both candles and bars show the same information, but in slightly different ways. And here I've got some key patterns examples for you. First one, pin bar. Pin bars are essential in price action and are often called Pinocchio bars. A pin bar typically indicates a trend reversal. It's usually a 3-candle pattern where the middle candle has a long shadow above the left and right candles. The pin bar is used as a signal to reverse the trend. Pin bar examples. It's easy to spot a pin bar, which is why it's popular. You will always notice that to work with a pin bar, you first need to see it. Not every candle with long shadow is a pin bar. It's best to trade in the direction of the overall trend on higher time frames. Second example is inside bar. The inside bar is the second most popular price action pattern after the pin bar. An inside bar consists of 2 candles, where one candle is inside the other. And this pattern indicates market consolidation or indecision. Buyers are not strong enough to push the market up, and sellers are not strong enough to push it down as well. Inside bars often form at high or low levels and can be good entry points. There are 2 types of inside bars: bearish downward and bullish upward. Most price action systems trade the breakout of the candle that has another candle inside of it, regardless of whether it's bearish or bullish. However, a more interesting way is to look for a bullish inside bar after a downtrend or a bearish inside bar after an uptrend. This can signal that that trend is losing stretch. Third example is 3-bar reversal. This pattern involves 3 candles. 2 candles are the same color and the third candle reverses by closing above or below the second candle. The rules for forming this pattern are similar to those of the inside bar. The traditional method is to enter after the third candle goes above or below the high or low of the second candle. Fourth example is false stop or pattern. This pattern shows when the price lags the stretch to reach a new high in an uptrend or a new low in a downtrend. And this allows traders to identify a potential trend reversal before many indicators will signal it. And we have closed our first deal of today with profit, guys. Thank you very much to my trading robot. And now let's find our second deal of today. But before, I want to remind you guys to join my free Telegram channel where I give profitable signals every day. And our second deal is gonna be on the currency pair Euro to Swiss franc. Will help you guys to identify potential trend reversal and entry points, enhancing their price action trading strategy. And that's gonna be it for today, guys. Thank you for watching. We have closed 2 out of 2 deals today in profit with my trading robot. Subscribe to my channel, like this video. Have a nice deals, guys. Good luck to you.